Hi everyone, and welcome back to my final morning report chart appraisal on Monday the 16th of March with me, Rich Perry, market analyst at Handtech Markets. Moving on to gold. And this gold chart, well, you'd say that this big 7-week downtrend channel, and I've actually drawn in the bottom of this downtrend to make a downtrend channel because you touched it on the way down and sort of backed off it. So that I think is now just suggesting that we are in a big downtrend channel. So we can play this channel. So you'd be selling any rallies, and to be honest, you've been doing that anyway. But it's just fairly. It also gives you a downside target within the channel, so that's interesting. But you'd say that the channel is pretty much indicative of normal trending conditions, with momentum falling, consistently declining and deteriorating, moving averages rolling over, and sequence of lower highs, lower lows. Look at this on this 8 sequence of negative sessions has been now broken by Friday's rebound, but I still don't think that that is suggestive of any sort of recovery. It was an inside day on Friday, and I don't think it suggests yet that there's any real sign of a recovery. Now, looking at the hourly chart, you'll see that you've still got these lower highs and lower lows on the gold chart. On the intraday basis, 75.40 is, I still believe, the key resistance, but then you've got a couple of lower ones at 70 big figure. Sorry, I'm talking about 1170 spot 60, and then 1166 spot 20. And the rebound that we've had today has just rolled over again, so it would still say that this outlook is still intact. The momentum is not as negative as it was, but still not positive. And I would say that you've got more of a consolidation going on this hourly chart than necessarily the basis of a recovery. And I would be taking it as that at the moment, because whilst I think these lower highs remain intact, the 66.20 is obviously the first one you need to look at, and then 70.60 as well. And I'll stick my crosshairs on there, because around that 65 area was the old low there, turned into resistance and then resistance again, and it's sort of still acting as that level. So I'd say certainly until you get above that 66 mark, but I think 70 would be more of a confirmation. But I think the bulls would need to really get above the 75.40 rally high to really suggest that it was turning around. Maybe have a watch out for the RSI, because the hourly RSI has just improved slightly. It's starting to move more above 60 than it has done in recent days or recent weeks. So that's interesting, and maybe the fact that the RSI it still has got this sort of bullish divergence, and the MACD lines as well with this chart. So again, that is maybe suggestive that the downside potential is sort of waning slightly, certainly as of the hourly chart. But the daily chart, you wouldn't really say that's coming through yet. So I'd still say that this is selling into strength and selling into rallies, because I would say that you're coming back towards probably the lows, the 42.91 and maybe even the 31.85 mark. You're still in this downtrend. That downtrend channel doesn't come in until 95, so still lots of room for a rally, and it'll be interesting, because you've got that 1190 old support, which is still in the play as well. So there is potential for a recovery that you could have on a short to medium term basis, but still be in this big medium term downtrend. So what we're seeing at the moment is just this consolidation, and I think the market's trying to figure out what to do in front of this FOMC meeting. Maybe it'll start to maybe it will go sideways in front of that meeting, but we'll wait and see what the outcome of that meeting is. Anyway, I wish you good luck in your trading on gold today, and I'll speak to you again tomorrow. Thank you.